When you walk into Starbucks, you think you're entering a tradition, and right now, as you watch this, they are holding a massive mountain of cash. Think about the last time you used the Starbucks mobile application to get those double stars, unlock special tier rewards, and skip the morning line. Instead, the application forced you to preload money onto your account. You swiped your credit card, transferred $20, $50, or even $100, and just like it was instantly turned into digital points on a screen.
This is exactly where the behavioral manipulation layer begins. Behavioral economists and psychologists, when you use physical cash, your brain experiences a literal microflash of pain associated with loss. But when you scan a beautifully gamified mobile application to pay for a $6, the pain of spending entirely erased, replaced by the gamified dopamine hit of watching digital stars. You feel like you're winning a game, but in reality, you are voluntarily surrendering your financial liquidity to a corporate giant. $1.6 billion. Let that number sink into your mind for a moment. That is the exact amount of liquid cash currently sitting on Starbucks card balances and mobile apps at this very second. Script box F CapCut. To put that staggering figure into a broader economic perspective, that is more liquid cash than 85 high-angle movement clip inside bank lobby space desks, glass counters, blurred teller windows. But here is the mechanism where this system becomes truly insidious. Every single year, a predictable percentage of that money, gift cards get lost in the back of desk drawers, mobile accounts are forgotten, users move to different countries, or people simply leave a balance of $2 or in the world of corporate finance. This forgotten cash is hidden under a clean. In reality, breakage is a massive financial engine. It amounts to roughly, they didn't have to roast a single coffee bean, pay a single barista, or rent a single square foot of real estate to earn that money. It is free liquidity, completely untaxed as standard revenue until it is officially claimed as breakage. When a real financial institution like Chase or Bank of America takes your money, strict federal regulations step in. Central banking laws force them to keep a specific percentage of their total deposits in cash reserves to prevent a bank run. They are legally obligated to pay you interest on your savings, and your deposit is fully insured by the government through the FDIC. But because Starbucks is technically selling you a store voucher or a gift card, they completely bypass every single banking regulation in existence. They can take your $1.6 billion, pull it together, and use it exactly like a massive hedge fund. Think about the absolute power dynamic of this arrangement. Starbucks has created a system where 30 million active users in the United States alone are providing them with an endless, rotating, interest-free loan. If a corporation wants to raise $1 billion to expand its operations, they usually have to go to Wall Street. They have to issue corporate bonds, negotiate high-interest loans with investment banks, or dilute their own shares to satisfy venture capitalists. All of those methods cost millions of dollars in interest and fees. But Starbucks doesn't need Wall Street. They have you. Your morning routine provides them with zero-interest capital. They can take that massive pool of public money and safely invest it in short-term government bonds, high-yield money market funds, or real estate portfolios. They earn millions of dollars in interest every single month using your money, while you receive absolutely 0% return on the balance sitting in your app. Even worse, if an economic crisis hits and thousands of users suddenly want their cash back, they can't get it. Starbucks terms of service explicitly state that app balances are non-refundable and cannot be exchanged for cash. You have traded liquid, universal legal tender for highly restrictive corporate tokens that can only be spent on overpriced liquid sugar. The final layer of this empire isn't just the cash. It's the predictive data engine that ensures the cash never stops flowing. Every transaction you make is fed into a massive algorithmic model. They track the exact minute you leave your house, your precise geographical route via GPS background tracking, the local weather patterns, and your historical responses to corporate stimuli. If the algorithmic engine predicts a 78% drop in your neighborhood's morning engagement to sudden rain, the system automatically triggers a dynamic, personalized push notification. It targets your specific cognitive vulnerability at that exact hour, offering double stars on a premium high-margin drink right when you are most likely to experience workplace fatigue. They are not just selling you a caffeinated beverage anymore. They are actively orchestrating human behavior at scale to ensure that their $1.6 billion interest-free machine keeps operating at maximum efficiency. The shadow bank of Starbucks doesn't need vaults, armored trucks, or massive federal cash reserves. It just needs your morning routine.